Hi, my name is Rupert Pontin and I'm Head of Insight and Communications here at Brego. Welcome to the slightly delayed Brego Leisure Intel broadcast for March 2026, in which we're going to have a look at what happened in the UK leisure sectors during the month, as well as look at a short summary of the political position and, of course, the economy that has driven retail consumer behaviour during March. So, without further ado, let's get ourselves underway. And it's fair to say that the war in the Middle East has continued to have a significant impact on the global geopolitical position, as the American administration have prolonged their aggressive action against Iran. On the face of it, it doesn't seem as though there's been much progress in either forcing regime change or indeed finding a peaceful end to the hostilities. Unfortunately, until that happens, then we were going to have an increased pressure on our home economy and our standards of living and cost of living. However, on the face of it, when you look at the economic indicators, the KPIs actually look pretty stable, and that kind of gives an impression that March had a reasonably healthy economic position. But we must also remember that some of that data refers back to what's happened in February. And certainly with the rate of inflation, it's remained stable at 3%, although it is based on what happened in February. The next rate announcement for inflation was due on the April the 22nd, and it's highly likely that at that point we are going to see that the inflation has started to increase again. As it stood, the bank base rate also remained level at 3.75% through the month of March. And we did unfortunately start to see some pressure of the war begin to impact itself in the money markets. And it is now likely that we will not see another drop in the bank base rate in the foreseeable future. In fact, contrary to that, we'll probably see an increase. Now, the next announcement for that will be on April the 30th. So that's a date to watch out for. In terms of consumer confidence, the index dropped by a further 2 points and now sits at -21. And we have to expect this to get worse during April as the true increase in the cost of living becomes apparent and begins to affect how people view what they want to spend their money on and how they pay their bills. Equally, unfortunately, due to the closure of the Strait of Hormuz, the average cost of a litre of unleaded petrol rose significantly during the course of the month and ended at £1.48 for a litre. And now we have to expect this to continue to rise rapidly. As I said, with no fuel coming through from the Strait of Hormuz, that affects 20% at least of the oil supply for the world. It's got to be said, though, this immediate increase in the cost of fuel is an interesting way to approach the position because, of course, the fuel that we're buying today was bought at a much lower rate. So actually, they're just improving profits, which is disappointing to see. And it's strange the government hasn't done anything about it, to be honest. In addition, the average mortgage rate has jumped significantly to 5.4% from 4.2% in February. And that's for a 2-year fixed period. And this has immediately stagnated the property market. Everything is dead out there unless it's a very cheap property. Until this rate begins to reflect the base rate more closely, then property transactions are likely to be just fire sale circumstances where people absolutely have to move for personal and financial reasons. So this is a bad place to be from that perspective. Finally, the unemployment rate remained even at 5.2%, which is a little bit of a surprise. But as the economy begins to feel the full effects of the war, again, this is likely to increase. April could be a difficult message. But overall, the message for March was pretty much the same as before, in that as a nation, we have to prepare for further increases in the cost of living and more economic hardship. It will also be very interesting to see what measures the government are prepared to take to help the public through what is going to be quite a difficult time. So the UK used leisure market, and for this, we're going to look at what's happened using the Brego Whole Market data, and we're going to look at it by the 3 different market verticals. So touring homes, holiday homes and motorhomes and campers. Okay, so first of all, touring homes. Total adverts in market actually increased by 15.5% off the back of a 3.5% increase in February. And this is actually a reflection that we're beginning to see the start of the season, and dealers are now actually advertising every vehicle that they've got in stock, every unit that they've got in stock, rather than just advertising as a core just to maintain presence in market. Number 2 berth adverts increased by 15.4%. That was off the back of a 9.1% increase in February. And it really is not the fact that the market is slowing down, because sometimes an increase in the volume of stock can signify that. This really is that there are more units being advertised, more units available for sale, possibly because of the show. But there's certainly more inquiries out there with the dealers, which is positive. 4 berth adverts grew by an absolutely significant 16.2%. And once again, that I think is dealers keen to advertise the stock and probably the part exchanges coming through from shows and new touring homes. Sales volumes increased by a staggering 37.2%. So there it is. We can see that there are more touring caravans being taken off the market, i.e. sold. So that's a positive thing. That's off the back of an 11.5% increase in February. That's really positive. The market share split was as follows. So for 2 berths, there was an increase of 28.8%. 4 berths, 36.7%, and 5 and 6 berths, 47.2%. So that's the biggest increase there. And yeah, really nice to see that sales have improved during March. From a days to sale perspective, they've actually dropped as well, which is good. And they've dropped to 63.4 from 66.7, and that's an improvement of 3.3 days on February. And that really reiterates the fact the market is starting to move and clear out some of the stock that had been hanging around from the winter months. The average used touring home sale price, that actually rose by a nominal 0.2%. That was off the back of a drop of 2% the month before, and that sits at £16,886. For further context, the average 2-berth price increased by 2%. The 4-berth sale price increased by 0.4%, and we got a big decrease for the 5 and 6 berths, which decreased by 10.8%, signifying that actually people are buying them. For sure, we know that because we saw that from the increase in sales, but they're buying the cheaper versions. It's just bringing that average sale price down. So that's what happened in the touring home market. Looking at holiday homes, again, we've seen an increase in the total number of adverts in market, and that's gone up by 6.1%, which is off the back of a drop of 24.7% the previous month. So that's good news to start to see the market begin to kick off again with more units being advertised. From a sales perspective, and that's indicated by the number of adverts we see removed, during March, we saw a significant 53.1% improvement, and that's great, because that came off the back of a 47.1% decrease the previous month. So it's exactly what this market vertical needed and probably expected. So we've gone ahead of where we were during the previous month, which is positive. 2-bed sales volumes rose by 8.4%. So that's going a little bit of a way to recover some of the previous losses in sales during February. The 3-bed sales volumes actually declined by 2.3%. And it seems at the moment it appears to be less demand for the smaller bedrooms that you get when you've got that 3-bedroom configuration, with 2 bedrooms obviously being more popular. So from a days to sale perspective, they were 84.9 for the month, and that's a huge increase of 35. It's come as quite a surprise, actually, given that the market is picking up, unless of course this is the reflection of shifting the older units that they had in stock over the Christmas New Year period and into January or so. So it could be just clearing those units out. The average used holiday home sale price decreased slightly by 2.6%, and that's dropped to £22,473. And that shows that it is the slightly cheaper end of the market that is selling better at the moment. And that's pretty stable, to be fair, and reflective really of this time of year and the type of customer that you might see in the market. For motorhomes and campers, total adverts increased by 8.9% during the month, and that increase again I think could be due to an increase in new unit sales, in part because the new unit sales are generating part exchanges, so bringing more used stock into the dealers. Sales during the month increased by a healthy 26.9%, which is great because they dropped in February by 3.8%, so we've seen that good boost further forward. And the split on that was an increase of 27.4% for motorhomes and an increase of 21.7% for campers. A nice, good balance there. Total number of trade adverts rose by 5.3%, again boosting that thought process that it is the dealer new unit sales that are driving part exchanges. But for the big change, we look at the private advert sector, where for the second month running, there has been an enormous jump of 86.7% in the number of private adverts. And that's over February levels. Now, to have 2 months jump in such a way is quite rare, although this does tend to be the time, particularly because this is when owners are starting to think about changing their unit, upgrading their unit, starting to think about those good weekends away, those summer holidays. I think probably just a little bit surprised that it's quite that big, but let's take it. So in terms of days to sales, that was interesting because they increased further from 92 to 109 days, which is probably not expected at this time of year. So it is higher than one would imagine. The only hope, again, is that this is reflecting a clear out of the older stock that had been sitting around over the Christmas and New Year period. And hopefully next month we'll see that there's quite a big difference and a change in that stock turn, and that days to sale will come down quite a bit. Finally, the average sale price of a used motorhome and camper increased again by 4.2%, and that's gone up to £56,183. And that just generally highlighting that the sales success for the used ones in that higher price bracket, probably the younger motorhomes and campers as well. So interesting round off for that. In summary, what's happened in the leisure market? So from a sales perspective, it's been good news across all verticals, with sales volumes up by between 26.9% and 53.1%, which will have brought smiles all the way around. There also seems to be more stock in the market too, as despite the fabulous improvements in sales, the volume of adverts in the market have also increased. There is more stock coming in, and it's just staying ahead of the sales rate, which is good because it means there shouldn't be any stock shortages during the summer months. However, the average days to sale for holiday homes, motorhomes and campers increased quite significantly. One can only hope that this is a reflection, as we've said, of the final clear out of the stock bought late last year or early this year. As we know, the sales have gone up. It's just a question of time before we start to see that reflected in the average days to sale. Looking at the average sale price, we see that tourists have increased by a normal 0.2% and holiday homes dropped by 2.6%, which is okay. It's there and thereabouts. And there was an increase of 4.2% for the motorhome and camper vertical. So it's always good to feel the start of the leisure selling season. We're seeing the parks and the dealers come alive with potential customers, with holiday makers. But we have to bear in mind that this time, this boost in March does come with a bit of a cloudy backdrop, because we know that the war in the Middle East is going to impact our economy. Inflation and interest rates are likely to increase, and we've already seen increases in fuel costs and mortgage rates. One can only hope that the leisure sector and the consumers within the leisure sector, they stick to type and decide that holidaying in the UK and spending money on upgrading their touring caravan, holiday home, motorhome or camper is the right thing to do, as they have done in the past in similar periods. So we just need to have a little of a positive outlook for the coming weeks. So I hope you found this a valuable review of the UK leisure markets. And if you want or you need more detail, be sure to read the Brego Monthly Leisure Insight Report. And that can be found on the LinkedIn page and also the website, or of course, by reaching out to me directly. We are now also posting insight and updates on our YouTube channel, which is called Brego-Official. So feel free to get in there and have a root around and catch up on previous broadcasts and other data. Finally, I just want to reiterate that if you want to improve your market insight and your understanding of the nuances in today's UK leisure market, then you need to speak to the Brego team. Andy, Safi and Nick would be delighted to show you how the Brego pricing platform and the market data will help you to improve your understanding of the market, but actually ultimately increase profitability for your business. And that's what we all want. Remember, they don't bite, they won't bite. They're here to help and to empower you. So thank you very much indeed for your time, and I'll see you soon.